Back to the tariffs now. President Trump raising the tariffs on China to 125% effective immediately. It comes in response to China enacting an 84% tariff on U.S. goods yesterday. Now, Trump says China disrespected the U.S. by issuing its own retaliatory tariffs. The president also announced yesterday a 90-day pause on tariffs for most countries except China. Joining us now is Ben McMillan, Chief Investment Officer at IDX Advisors. Ben, good to have you with us.
Great to be here.
So let me ask you, this 90-day temporary pause, obviously it was tremendously helpful for the markets yesterday to dig halfway out of a hole that we've been in for about the past 5 days. Investors still going to be cautious as the market opens today?
Yeah, absolutely. I mean, there's a saying that, the markets take the escalator up, but the elevator down, and that's what we've seen this year. And trust is the same way, especially when it comes to uncertainty with the markets. I mean, the markets hate uncertainty, and this is a president whose modus operandi is uncertainty. So I think we're even seeing it today. If you look at the futures, they're implied down quite a bit. I think that's the market saying there's still a lot of wood that needs to be chopped here, especially as it relates to, some kind of deal getting worked out with China.
And let me just ask you, what sectors are most at risk? With this 84% tariff that China's imposing on U.S. goods and with 125% going back in their direction, what sectors are the biggest problems here for the U.S.?
Yeah, so when you think about what we export to China, it's actually quite a bit more than people realize. So, to put context on this, U.S. exports to China is about 140 billion. China exports to U.S. is about 440 billion. So there's a huge differential there, and that's part of what, ostensibly the Trump administration wants to close. And our key exports to China are things like semiconductors, electrical machinery. That's the majority of that 140 billion. You've also got what they categorize as kind of heavy machinery, so think Caterpillar, John Deere tractors, and then agriculture, soybeans. So this isn't unilateral. I mean, there's going to be a lot of pain because obviously we import a lot of our consumer electronics, a lot of our furniture, a lot of our auto parts and toys. That'll be felt pretty immediately by U.S. consumers here. But China's also not immune. Both sides have taken a very, tough posture, and it's going to hurt both sides. But it's certainly going to impact U.S. imports of Chinese goods quite a bit more.
Let me ask you how soon and in what ways American consumers are going to start to feel the impact, of these tariffs. I know everything's kind of on a pause right now, but then you're looking at a uniform, maybe 10% tariff across the world, with the exception of China. And negotiating with China, as we know, is a totally separate ballgame than negotiating with the rest of the world.
Yeah, I mean, that's interesting. It's actually, Trump, or I think it might have even been Eric Trump, tweeted out, the first countries to get in line are going to get the best deals. And, we actually saw our countries line up pretty quickly, with the notable exception of China. And so when we talk about how long this is going to take to, impact consumers here, it's about 1 to 3 months. That's how long it takes kind of prices to work through the supply chain. So when you think about the consumer electronics, which is the big one here, China supplies 80 to 90% of our, smartphones, our TVs, our laptops. And, 104% tariff means that, the $500 iPhone is going to double, over the course of, 90 days, more or less. You're going to see, suppliers here in the States try to absorb some of that cost, but it's going to affect, even things like IKEA, this Swedish furniture brand brings in a lot of, they use a lot of Chinese, exports to, manufacture on their side. So you're going to have to see sofas double in price. So it's going to start to really impact U.S. consumers here in about 90 days, assuming there's no changes or de-escalation.
Let me ask you to look into the kind of your crystal ball here. This is a 90-day pause. We got about 88 days before another decision really needs to be made. What do you think happens over that time? Now, I know you referenced that all of these other nations are lining up. We've only heard calls were made. The White House will not even provide a list of what countries have actually even called, and no deals have been done. I mean, let's all remember the USMCA, which was with, Canada and Mexico, two of our friends. That took 2 years to negotiate. Do we have that kind of timeline?
No, we do not have that kind of timeline. And if anything, I think the markets yesterday showed us that, and specifically the bond market. So that's the one thing I think that actually kind of forced Trump to pivot here a little bit. And so the key things to watch from the forcing function perspective is inflation on the U.S. side, because tariffs are obviously inflationary, and then also GDP on the Chinese side. Now, that said, I think there's a lot of posturing going on here. This is a president who, his MO, his stated, art of the deal is to posture very hard and then work backroom deals. And we actually saw this pre-COVID. If you remember, there was a back and forth with China, and there was a big Oval Office deal. There was handshaking. And then in the background, it didn't really get done the way the U.S. wanted. But that was fine because it was an off-ramp for both sides, that both sides can couch it as a win to their side. So I think that's what we're going to see. At least I'm cautiously optimistic. That's what we're going to see, is that there's a de-escalation of the rhetoric. There's some backroom deals. The Trump administration will figure out a way to, start excluding things, couch it as a win for his side. Xi Jinping over in China will do the same thing. And my guess is we'll probably see something like what we saw in October of 2019, where it just kind of slowly de-escalates and fades out of the news cycle. At least I hope.
Before I let you go, last question. The bond market. Obviously, we were talking about that yesterday. A lot of people look at the stock market and they see the numbers falling, but it's really the bond market that you need to pay attention to, because that basically that overrides worldwide confidence in the U.S. economy. And if that erodes, forget about it. All bets are off. Is that pretty much the telltale sign moving forward? No matter what kind of tariff numbers the president decides to put out there, arbitrary or not, it's the bond market. If it sinks, we're pulling back.
Yeah, 100%, 100%. It's like you said. I mean, the bond prices are literally the price of everything: cost of capital, mortgages, and we have to refi a ton of Treasury debt this year, which is one of the reasons I think the Trump administration actually strategically wanted to kind of force a recession to bring yields down. So we saw yields back up quite a bit, and I think if they go any higher, it's going to force his hand.
And now we'll see what happens with the big tax cut and what that does to the deficit. I mean, this is a whole nother issue that needs to be discussed as well. Exactly. All right, Ben, thank you very much. We appreciate it. That volatility, you know how the market loves volatility. All right, Ben McMillan, Chief Investment Officer at IDX Advisors. Thanks again, Ben. Good to chat with you. And we've got you caught up on everything tariff related. Just head over to CBSNewYork.com and you can see those massive fluctuations over the past week.